Ari, you know this. You cannot find a person that you can really sit down and talk the stock market. Many people talk sports all day long, but not the stock market. I like to collect dividend-paying stocks, almost like people collect sports cards. You buy a dividend-paying stock, it pays the dividends. We can take that monthly income and do multiple things. It's a dividend tree. With a stock that I am losing and had to tell my family why I've lost half the money, I better know something about that stock. Ultimately, what we're trying to get is we're trying to get from a trade to a passive income strategy. You're going to write a covered call. We have been talking for months about you selling premium. It's time. So he told me exactly what to do. And I'll never forget, when I put on the trade, I felt the trade. Now, I know for a lot of you out there, you're saying, oh my gosh, this guy is so dramatic. But when you sell your first covered call or write options, your first covered call is a moment.
Investors, welcome back to another go-round of Masters of the Market. Now, every single week, as you know, I am joined by a master of the market. And this week, I'm particularly excited because we have John from Retire on Dividends and Covered Calls on with us to talk all about, of course, dividends and covered calls. Now, John has really mastered the game, come a heck of a long way. So, John, I first want to welcome you here to Masters of the Market, say thank you for joining me. Pass the first question right over to you and ask you, what's your story and how'd you get to where you are today?
How you doing, Ari? I appreciate it, brother. I love how you reached out to me. It was actually a little bit of a surprise. I love it. My story is quite simple. I've been an investor for many, many years, swing trader, day trader, never had success. Actually came from the Midwest. I joined the Navy. Once I joined the Navy, I realized right away that you want to be in the room with more inspirable people, people that are more motivated and have the big picture. And that's what I realized right away, because when I showed up on my ship, a lot of people were into the stock market. Now, this is like 1987. So for me, I had no real history of the stock market as I grew up. Then once I started meeting these people and I started to be inspired, I wanted to be like them, right? So I became that person in the room that I wanted to be better than them, right? I always tell my kids, if you're the smartest in the room, you need to get out of that room. If you're the most motivated in that room, you got to get out of that room. And that's what I did. I became more motivated and inspired to take my life to the next level. Now, the stock market was that. I got instantly excited. And then as I moved on through life and we were able to trade online, I'll never forget, I opened up my first E-Trade account. I bought Compaq Computer. I bought Dell and Intel. Well, we fast forward and I'm trying to day trade the market, just like every young buck out there trying to make a buck, turn a nickel into two. Didn't have any success. And of course, I have a family and, doing all the family stuff. I tinkered here and there. Then around 2011, I'm at the gym and I'm talking in the hot room with all these guys and just talking to them about dividend paying stocks and how I do it, this, that, and the other. I'm not really active in the stock market at this moment. I'm more of a buy and hold guy because I literally got whipped around trying to swing trade, day trade. And I'll never forget my buddy Jerry. Jerry at this time is probably about 75. He's sitting in the room as I'm talking to these other guys, and when they leave, Jerry says to me, you're rather young to be talking about dividends and retirement and all these things. And I remember we would talk stocks every day. So I would come to the gym knowing he would be there. And I would just want to pick his brain, talk to him. I became his friend. Quickly, I realized he was my soulmate in the stock market. See, Ari, you know this. You cannot find a person that you can really sit down and talk the stock market. They usually lose interest, their eyes glaze over. You can find many people talk sports all day long, but not the stock market. Jerry and I bonded. And I'll never forget, I was in Vegas and I was swing trading, day trading, and I really thought I knew what I was doing. I mean, I really did. I put on a trade. Life was great. I knew it. And sitting there in Vegas, in a Vegas hotel, trying to trade, I Made a mistake. I actually made money, but I made a mistake because I sold too early. Stock rocketed higher. I would have made all my money back that I had lost. And I realized at that moment I wasn't good. And I came back to the gym, and I'll never forget, I'm in the room. I'm talking to Jerry. I'm sitting in the room. Jerry walks in, and I said, look, Jerry, I'm kidding myself. I'm kidding myself. Everybody thinks that I know the stock market, but I don't think I do. And had a good moment with Jerry right there where he just let me talk. And he said, you know what, John, I'm going to teach you how I fund my retirement. For 30 years, Jerry used the stock market to fund his retirement. He had a business, sold the business, had about 300,000 back in the 80s. And he told his wife he was going to fund his retirement with the stock market. Now, Jerry sold premium. He wrote cover calls, sold cash secure put, bought closed-end funds for monthly dividend income. So slowly he started to teach me the ways. And every day I'd come in. He knew I had Chevron. I had about 1,000 shares of Chevron. It's trading for about 140. And he says, do you know the premiums you can get on a Chevron covered call? And it intrigued me. So I'd ask him the simplest of questions. Now, to me, they seem stupid and redundant, but he would sit there and literally hold my hand and talk to me about it. Now, he didn't know that he was mentoring me, but that's what he was doing. And he was also inspiring me. See, I wasn't the smartest cat in the room, where I thought I was. With Jerry, he became my mentor and he became my best friend. Now, I'll never forget, I had a stock that had doubled. And I told Jerry, I said, look, I'm going to sell that stock. I just don't see any more upside, blah, 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 blah. Jerry said, no, you're not. You're going to write a covered call. We have been talking for months about you selling premium. It's time. So he told me exactly what to do. And I went home, or I went and I did it. And I'll never forget, when I put on the trade, I felt the trade. I didn't just put on the trade and it happened. I felt it. I was in it. And I remember, you're selling premium. You're writing a covered call, man. I don't know what's going to happen. Did I do something right? We're dealing with options. I know for a lot of you out there, you're saying, oh my gosh, this guy is so dramatic. But when you sell your first covered call or write options, if you're into it, if you're in the game and want to succeed, your first covered call is a moment. It's absolutely a moment. And for me, couldn't wait to get to the gym. That's what I did. Got to the gym, man. Jerry was working out. I didn't want to go out there. I waited for him. And when he got there, I told him about it. And he helped me with that very first trade. I made $125. I did a screenshot of that very first trade. Now, that was back in 2016, maybe 2015, late 2015. And by August of 2016, I was spinning about 5 different stocks. And then that one trade that Jerry helped me with, gave me confidence with, motivated me. I don't trade any other way. In fact, I have a buy and hold portfolio. And when I get a chance, I write covered calls against that portfolio. I write covered calls, sell puts. Selling premium beats the stock market hands down. Now, since 2016, with about $225,000, I was able to generate some reasonable, what I call income. What I did, and you know I'm on YouTube, what I did, I showed my trades. We talked about them so other people could relate, because most people have some sort of IRA, right? Whether they're through dumb luck or whatever, they have an IRA. They're going to have to use their IRA. There's no pension, right? So they're going to have to live on their dividend income. So by this point, Jerry has taught me how to do the stock market, selling premium. I'll never forget. I did a trade where I wanted to show Jerry the trade. And it was the weekend. We weren't going to the gym on the weekend. I did that video and I posted it. And I said, Jerry, you need to watch that video. It was on Halliburton. And I thought I did a good job. And it was my biggest trade ever, $48,000. Bought 1,000 shares of Halliburton, wrote a covered call. Man, living the good life. Well, that video turned out to be the beginning of my channel. That video turned into almost 1 million views. And all I try to do is tell my story. So I see other YouTubers out there trying to create content for, these 3 stocks you never sell. Look, if you're listening to any of those people, you need to walk away because we don't want to marry stocks. What we really want to do is sell premium against those stocks. But with that said, I decided I was not going to be that guy. I was not going to be the guy that tried to create content for you, blow smoke up, you know where, with all of these big picture deals. I was going to tell my story. And that's what I did. Almost every single video on my channel, I have 450 videos plus, I show you a trade, we talk about it, so maybe you learn something. Because that goes back to me paying it forward because of Jerry. Now, here's the deal. I'm well beyond Jerry now. But you know what? Jerry's 85. To me, he's my best friend. I visit him now. He's in a memory care facility. So I'm going to visit him this Thursday. At the end of the day, being from the Midwest, right, growing up in that blue collar community, right, family, values, so on and so forth, being in the Navy, working for a big 9-to-5 company for which I retired in 2022, and just being a family guy, you appreciate it when somebody helps you. You appreciate it. And if you're sitting out there right now and somebody's helping you and you're not appreciating them, shame on you. Because at the end of the day, I could tell you this. Since 2016 and where I'm at now, I get people pulling me from every which way. Ari, right here, calls me up, says, hey, let's do an interview. I don't do interviews. I'm working this. This is my 9-to-5 now. I don't have time for this. However, your channel is awesome. You're teaching people the way, because ultimately what we're trying to get is we're trying to get from a trade to a passive income strategy. So you go from trading and making the quick buck to becoming a passive investor, passive income investor, because that's real wealth. See, when you're generating wealth without you working, that's when you have true financial freedom. And hey, at the end of the day, let's go back to what Jerry said. He funded his retirement with trading the stock market. Jerry has true passive income because he does not trade the stock market today. And that's my inspiration. See, when I entered that room, he motivated me. So that's what I try to do on my channel. If you watch my videos, I spend at least the first 4 minutes trying to motivate you. See, or if you came to my channel and you're watching my video, the first 4 minutes, I'm gonna do a lot of talking. And people say, look, man, you talk too much. But you want to know something, Ari? You have thousands of people out there in your community, my community. That's what they need. Because what did I tell you earlier? Most people will not listen to people in the stock market. They don't want to hear it. Maybe they want to hear it, but then they don't want to hear it. Their eyes gloss over, they move on. Here's the deal. The stock market is the only place for guys like you and I, small ball players, to create real wealth. That's right. We don't have the money for real estate. You're going to buy $1 million house and try to sell it for property? No, you're not. Okay? At the end of the day, using the stock market allows small ball players to get involved, and we can sell premium against our shares, generate 3 to 5% every single month. That is true financial freedom, because when you can generate those kind of returns and then take those returns and drop them into passive income stocks that pay you passively, now you're financially independent. So long story short, that's essentially my story. I did retire from the 9-to-5 in 2022, and I started this job, which is I'm a professional stock trader. I literally left that seat for which I was a computer guy, sat in this seat, and I basically trade the market. I sell premium. I don't buy and sell. I sell premium. Now, what I do is I'm more active to generate that cash flow, and we move on. Because one thing I'll tell you, Ari, before we move on, you have to be in the here and now. I talked about how people do not participate in the stock market. They just don't. They have an IRA, they just let it do this, that, or the other. And those that try to get into the market, once they start failing, well, they'll ditch it. I created a dashboard And that dashboard helps people that want to be a part of my membership, help them find their next great cover call stock, dividend stock, ETF, so on and so forth. I created that, and I created all the tools because Jerry told me, look, you got to keep the numbers in front of you. So I kept all those numbers in front of me with spreadsheets. Jerry would come to the gym and we'd be talking about a trade. He'd have it on post-it note and he'd be writing it out. I said, Jerry, I'm not going to keep post-it notes, man. I'm a computer guy, right? So I created all these free tools, cptdashboard.com, core position trading, cptdashboard.com. Go there, get them all. I don't spam you. Look, I have a membership, and that membership, see, that membership grew from those spreadsheets and the dashboard. And people wanted to be a part of what I'm doing. They wanted to take a peek over a successful active trader. That's what I offered them. And hundreds, well, thousands of people have come and gone from my membership. From that, what I realized is that I can't take any days off. You'll have guys on here doing interviews, and you'll see people on YouTube, and they come and go. Not me, brother. Every single day, I'm grinding right here. Because if you're not in the game, Ari, you can't have success. I mean, hey, if you're going to take your IRA statement in a down month and throw it away and not look, fetal position, you're just never going to have success. So for me, every day I come here, and regardless of how the markets are moving, we're constantly in the game. I tell people in my videos all the time, we have to be in the game because look, the Visa bills don't stop. The Verizon bill don't stop. So I take a very simple approach, straight talk style. See, when I started this, Jerry taught me. We're talking about options, and Jerry said, hey, you know that option? That has about 50 cents of real money in it. I said, real money? I thought it was intrinsic value. I thought it was extrinsic value. All these big, highfalutin words that I'll never use. Never use. At the end of the day, I try to keep it simple, straight talk style. Try to bring it down because that's where I learned. And from that, I built this knowledge base and experience and confidence to where I've probably done 3,000 trades. 3,000 trades since 2016. Prove them all. I can prove them all. And that's what we do. We stay active. We try to pick up little crumbs along the way. That was another thing. I remember somebody said to me, a comment, maybe talk to somebody. They said, hey, why do you, what's this whole thing about crumbs? You always say in your videos, crumb here, crumb there. Think of it this way. It's a motivating thing for me. If you pick up one crumb here, one crumb there, all of a sudden we're talking real money, aren't we, Ari?
Sure.
You have to have these motivating things that keep you going. And that's what I do. I mean, if you ask me how I trade, I'll tell you at the end of the day, I do 9 different strategies just to keep me interested. And I love it. So for me, you asked me to tell you my story. My story really goes back to joining the Navy, realizing that I needed to up my game and find myself in the room with smarter, more motivated people. And once I did that, sky's the limit because now I'm hungry. See, I'm hungry. I want to learn. I want to get better. And that's what I did. And I tried and failed, crashed, burned. Jerry helps me out. My mentor, absolutely hand to God, steps down, says, I'm going to take care of you. Because what I'll tell you is this, I didn't have hope. I didn't have hope then. Jerry helped me. So what I'll tell you is this, find yourself a mentor. For a lot of people on the internet, I'm their mentor. I show them a trade, talk about it. I get emails like you can't believe around the world saying, you're my Jerry. Now, I really don't know how to feel about that. But what I do is I always tell them this, watch the trade, hear me talk about it. Maybe you learn something because it really is that simple. This is not rocket science. Don't be seduced from some dude doing a video or an interview, and he's got 9 monitors back here, making it look like he's Mr. Know-it-all, $1 million investor. Ari, I use, and I'm sure you're going to ask me, I use the most basic options window to place all my trades. Do I have any special software? No, don't have to. Because what happens, Ari, is this. 9 out of 10 people in the room, they lose it once they see all that stuff. See, all that stuff makes it look more important, harder than what it is. All right, I buy a stock, I give somebody the right to take it at my price for my time frame for a price.
Sure.
If they take the shares, they take them. Right? Then I take the profit, we buy a dividend paying stock. That's it. Beating the market hand over fist all day long. You don't have to pay for AI traders, all that baloney. What you have to do, you get your knowledge, get your experience, and then do it. One trade, two trades, you don't need anybody else. Sorry. Go ahead.
Let's talk for a moment here, because what I love about your story, and first of all, I hope everybody can hear how much energy is coming out on the other side of that screen. And when you go to John's channel, you'll get that same energy, which is precisely why I wanted to jump on with you, John, talk about what you're doing, because you honestly have a ton of insights that, just like you mentioned, across YouTube, you get a lot of guys with a lot of screens talking a lot, but very little, right, to actually show for themselves or what they're doing. And it's become more of a game, if you will, than a lifestyle. Now, when it comes to you, I heard you mention a couple of times, before you met Jerry, there was a lot of trialing and erroring, and there was a lot of failures. What were some of those failures, and what do you think are some of the most common mistakes that either we youngsters are making, or on the converse, some more experienced investors just haven't come around to understanding yet?
Well, hey, to be honest with you, we still do it today. Entry. It's all about entry, right? So you have to have some skill in technical trading. Usually what I do, because I've just realized over the years, we don't have to get too technical. We can look at a one-year chart, and we have different charts that we look at. Getting a little more specific, we look at the RSI. The RSI will tell you if a stock is overbought or oversold. You don't want to be buying a stock when it's overbought, right?
Sure.
Because chances are it's going to fall. So what we want to do is have some knowledge of technical trading. Now, that's what I try to do on my channel. Every single trade we talk about, I usually show the chart, and I tell you where I'm going to have an entry point and where we don't want to get involved. Because going back to those days that I crashed and burned, didn't do any of that. I literally maybe got a tip from a buddy. Hey, we're going to buy so-and-so. And back then, we were looking to make 3 to 4 to 5% a swing trade, a day trade. And then the trade goes against you. And now, because I have no experience, I am literally hands sitting on my hands. I'm almost paralyzed because I don't know what to do. What I'll tell you is this. We can do our due diligence, starting with great stocks. And this is what I'm going to tell you. Great stocks, Wall Street loves. A lot of times they love them because of that fat dividend. 3M is a perfect example. 3M just recently had earnings, got destroyed, but yet it's hanging around 95. It's hanging around an area I like. In fact, I have a video dialed up. We're going to talk about 3M. We want to use great stocks. We want to have these entry points for which we feel comfortable. Once we get involved with the stock, it's more favorable that the stock goes higher. Okay? Then what we want is a plan. Hey, I got a plan with 3M. And I outline those plans to my members. And at the end of the day, we have no insider information, Ari. We're just retail investors, and retail investors lose 97% of the time. That's a fact. Studies have proven that most of us lose. That's why when I started selling premium, I noticed the odds were in my favor. If I followed the golden rules of cover call writing, I would buy great stocks with dividends, and I would avoid their earnings. I would sell premium, which I would make premium alone 3%. And if we get a little bit of a stock move, we can make a little more. Then the trade's over. We're sitting there with shares or cash. Writing covered calls against the shares we own, you win twice out of 3 possible outcomes. And the third outcome is that the stock doesn't finish above your strike price where you agreed to give your shares away, and you own the stock. So guess what you could do? Write another covered call. So with that said, crashing and burning absolutely is a part of Wall Street, because even the biggest of the big wigs do it. The problem is we don't have that big of a bankroll. So when we do it, it hurts. So we have little wiggle room. So we have to come up with strategies that put the odds in our favor. And for example, you talk a lot about dividend paying stocks, dividend paying closed end funds and ETFs puts the odds in our favor because at least at the end of the month or every 3 months, they're paying you. So at least, even if you make a bad decision and you find yourself in a bad spot, you're getting paid. Make good decisions. That's the key here. So many times when I would lose money, crash and burn, it was I didn't do my due diligence. I don't know anything about the stock. I don't know if I even wanted to own the damn thing. See, these are bad decisions because when the trade goes against us, guess what happens, Arm? We give up. That's the difference between an average trader, good trader, and a great trader. Because at the end of the day, you got to stay in the game. That's number one. We want to make good decisions. And then we want to make sure the trade we put on is more favorable for us to have success. And that's what I do for my members all the time. It's all about putting ourselves in a more favorable position. That's why I talk about individual trades that I do. Because at the end of the day, talking about some hypothetical trade, one, you don't get engaged because I got no skin in the game, right?
Sure.
I'm just talking some hypothetical trade, no skin in the game. So you're not engaged. So I talk about all my trades. And then I talk about my mindset as I entered the trade, where we're at, and what my expectations are. Now, do they end up perfect all the time? Of course not. I just had a square trade last year, lost 38 grand. So we hope that we make good decisions. But what we have to do is try to do things where we have a more favorable outcome because we don't have crystal balls, right? So that's what I try to do.
John, what defines a good company to you? Yeah, right. You said focus on the good companies. Now, I know yesterday when we were talking, right, you mentioned like avoid the penny stocks, right, and go for the good ones. But and it may seem like a simple question, but for a lot of us, we are asking like, what really defines a good company?
Yeah. Well, I mean, look, the default, let's say it would be all your S&P type companies, right? If the S&P 500 is putting a company in the S&P 500, they've got all the things that you want, right? Earnings, you got dividend. Well, most of them have dividend. Great companies are usually of a certain size. They have volume. They pay dividends. They have profits. For the most part, household names. You know, you go to Starbucks. Starbucks is one of those companies. 3Ms, you've seen their products all over the place. Now, stocks move. And guess what? Stocks don't always go up. 3M was $250 when I watched that guy on YouTube telling you to never sell 3M. It happens, man, where companies just can't execute and they fall. Hey, Starbucks is kind of feeling that right now. Yeah. Of course, what I define as a great stock, I like AMD. It's a tech stock, semiconductor. They're in the AI space. That might be more risky than others. It's about risk tolerance here. So you have to define your trading, number one. Dude, I had a guy email me. He says, hey, I bought Apple. I'm down $3. Should I sell? I'm down $3 on Apple, which is trading for like $400 at the time. I don't even know what that is percentage wise. I said to the guy, I was about to write the email, and I'm like, I'm down $30 on Alibaba right now. And you're asking me if a $3 down day on Apple when it's trading at 400 is a bad trade? Risk tolerance. Do not find yourself in stocks that you don't want to own and they're too volatile. I'm playing 3x leveraged ETFs that are down 10% or up 10% a day. You have to know what you're getting into. So finding a great stock really is not me, it's you, anyone out there. You have to be comfortable with it. Go to bed every single night. I always used to have this very simple deal. If I had to sit down with a stock that I am losing my and had to tell my family why I've lost half the money, I better know something about that stock. That's how I always approached it. So for the most part, when I trade, talking about the big names, Gilead, Chevron. We get a little more risky with Coinbase and use the 3x leveraged ETFs. Love the juice. You can ask me about any of those investments. I'll tell you exactly why I'm in them. Most people can't. Most people got a hunch and they went out and bought it. I hear this all the time. In fact, I know somebody right now that has bought 4 stocks, and they must have a horseshoe up there because they're winning. Yet I never won. So I need to find where I'm at, and we don't change. All right, I'm gonna tell you this. For you football fans, right? You football fans, you can see all the good stuff up there. Terry Bradshaw said before Super Bowl 13, he said he was interviewed about what's the game plan you're going to use in the Super Bowl, and he basically said, look, you dance with who brung you, right? I'm not going to step out of my box, right? Just because I got a hunch. Somebody turned me on to a penny stock that's going to double in the next 3 months. No. Rule number 1, dance with who brung you. See, I have to be accountable to my money, my members, people on YouTube, right? I can't just get on YouTube and say, don't sell these 5 stocks, or I'm buying these 50 stocks. To me, a lot of these folks sometimes just they build content for the YouTube dollar bill.
Sure.
That's what they do, right? They build content to make money from YouTube. So I guess answering your question, because you could tell I get going, it really is up to you. What is a great stock? What do you feel comfortable with? What do you know? Who did you dance with, right? Stick with it. And then as you build your skills, right? We're sharpening our blade. We're getting skills. We're learning how to be a technical trader. We're learning about X dividends, and we're learning about all these things that we didn't know before. And our blade is getting sharper. We're getting better. And now we're making better decisions. And then when we put ourselves in a more favorable position, we have a chance to have a more favorable outcome. I know that sounds absurdly simple, but at the end of the day, yeah, that's where all start.
I feel like all success deals in simplicity most of the time. It's don't complicate anything. Keep everything simple. You did talk about risk tolerance. Is there a way for investors to really explore their risk tolerance? How would you recommend an investor really explores his or her risk tolerance level? Do we just get skin in the game and trial and error a little bit, or do we do some reading?
Well, again, that goes back to, look, there's some wealth managers that get paid a lot of money to do this for people, because most people can't handle the risk, period. If they heard that their portfolio was down $5, they'd be, oh my gosh, I'm losing money. Huh? It's all about your risk tolerance and handling a stock that goes up or down. Up too, because I'm going to tell you right now, we always talk down, right? I know people that they will buy a stock like Coinbase. In fact, I know one person that did this. They bought a stock like Coinbase. They made $100 a share. They went out and bought a brand new car because they felt rich. That stock fell all the way back to where it started. So there's an up and there's a down, right? We always focus on the down, but there's also, you have to make good decisions on the up. So with that said, risk tolerance, I believe at the end of the day, you can get into the technicals, obviously with implied volatility, where the stock's at, with the dividend date coming, with earnings coming. You can, through your education, start to build this risk tolerance where, for example, when I first started, I might have felt a little leery about writing a covered call on Chevron. Didn't know how to do it. So I was leery. I was a little worried. My risk tolerance wasn't good. Now I'm dealing with 3 trades where I'm using the ETF yin, and I'm down $5 on a $16 stock. So risk tolerance through your education and learning, that will change, right? Get a little more risky, right? Remember, risk, reward. So what I would say to anybody out there, you're really going to have to find yourself. That's why you paper trade. Try to paper trade. Pick 3 stocks and literally try to paper trade them. Try to feel them, right? Act as if you bought it, man. You wrote the covered call, or you did the put, or you're doing a poor man's covered call. Try to live in the moment with that decision. And you're going to see it go up and down. And I want you to try to feel it. So anyway, with that, at the end of the day, what I'll tell anybody, try to be diversified, right? Because if you put all of your eggs in one basket, you might not be able to sleep at night if that stock's down 30%. But if you've diversified across 10 stocks, 5 stocks, 3 stocks, you're going to have one maybe up, one maybe down, one maybe even, right? So what it does is it dulls the emotions. As this one's down, this one's going up. That's what we hope, right? So I would say be diversified, right? Understand what your risk tolerance is. Like if you're afraid, you should not be in the stock market. What you need to do is learn, watch YouTube videos, and paper trade. Put the trade on paper, man. I know it seems simple and it doesn't seem exciting, but if you learn this, you can have success in something that most people don't. So risk tolerance is all about the individual. Yeah, sure.
Now, a lot of people would say, it's better to have time in the market than trying to time the market, right? So if people are getting all angst when they're paper trading and learning, should they perhaps start with an ETF just to get their time in the market? Or when you even talk about diversification, right? How many stocks should we add to these portfolios that we're building? Can you talk to us a little bit about the beginning stages?
Okay, so this is an interesting question because you could take all your money and put it in the S&P 500 or different mutual funds and things like that. You'd have exposure across the entire stock market. But if you're going to be an individual investor and you're going to do this on your own, obviously your bankroll is everything, right? Because if you only have $1,000, you can't buy 30 stocks, and you definitely can't buy NVIDIA. You can't buy Google. You can't buy Microsoft, right? So a lot of it has to do with your bankroll. Okay. Now, also your trading. You said something very interesting because I'll never forget my buddy. He told me that's exactly what he said, man. It's not timing the market. It's time spent in the market that'll make you rich. And that's true. Because had you invested in the stock market in, let's say, 1980, when I was a young buck, we wouldn't have to do anything today. We wouldn't be talking, me grinding. Oh, no. So it depends on the trading you want to do. See, I'm a selling premium guy. So my trades are 30 days. They're 1 week, 2 weeks, 30 days, 45 days. I'll even do 6-month trades. So I have to time the market. Now, with that said, I do it in a way that's not a swing trader, day trader, because they look at things in minutes. They want to be out of the trade by the end of the day. So it really depends on how you want to trade. So I'll give you a quick example. You're a buy and hold investor with dividends. Well, right there, that defines who you are. You're going to be a buy and hold investor. And now you have to decide what investments are going to fit your risk tolerance. And then, of course, you go out and buy those stocks. So right there, that's one type of investor, right? Then you have a guy like me that I sell premium. So I buy a lot of those same stocks that person did, but now we're going to sell premium against those shares. Or I'm going to use my cash for a cash secure put, and we're going to do that game. Then you have people that will trade the market more actively. And of course, they're spinning. There's no time in the market. To them, time is actually a negative. Because once they start making money or losing money, time is now against them. They either got to make a trade to get out or stay in or whatever. So it really depends where you're at trading wise. And then, of course, it talks about risk tolerance, because if you're a buy and hold investor, you might take on more riskier stocks, or let's say newer stocks, because you have a long window. You have a long window owning these things. You might own them for years and years and years. A guy like me may not. I may buy it, and within 30 days, I never see it again. And of course, swing traders, day traders, gone. They're in, they're out. Anything that pops up on their screen, or maybe they're getting feeds or trade alerts, they're moving to the next trade literally in days, if not minutes. Now, ETFs, Of course, ETFs give any investor exposure, diversification. For example, I mentioned yin. Yin is the ETF, actually, yin is the 3x leverage ETF to the large China, large cap stocks. So yin, and that's not a recommendation, by the way. No, 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 no. You stay away from yin. I should have stayed from yin. Anyway, it's diversified amongst the large cap China stocks. I believe China is more of a buy than a sell. So I got involved with Alibaba. Then I said, well, I'd love exposure to yen or the larger group of stocks. And that's what I did. I use people use the SPY all the time. Everybody says, hey, you'll see YouTube videos selling premium against the SPY. Well, I like the SPY too, which is the S&P 500. That's how every investor can get involved buying the S&P 500 is buying the SPY, right? Of course, by now, you know me, I'm going to find the 3X leveraged ETF, which is UPRO. And I buy that sucker and I will generate 5 to 6 to 7% monthly covered call premiums. And again, risk tolerance. Most people can only handle the movement of the SPY. For me, I want that juice because I'm going to sell premium against the shares, knowing it's the index. See, UPRO is the SPY 3X leveraged. It's an index. That's the mindset. That's how we think of things, right? Because I remember when I first introduced 3X leveraged ETF to my channel. Oh my God. Oh, stay away from that. Oh, heart attack. It's an index. You're playing the index just like I am. I put a little juice to it. Long story short, I've used 3X leveraged ETFs for at least 3, 4, 5 years, and I have fun with them. They provide a lot of premium when I sell covered calls. And again, they fluctuate tremendously. But when you're in the game, you play the game. So
let's talk about some of
whether
this
we're up or
juice
down, we're always in the game. Go ahead.
Let's talk about some of this juice that's coming in on a monthly basis. So obviously I'm a dividend channel, and you are also a dividend channel there, of course, with covered calls. How much, you can ballpark this, on average is coming in per month on your end?
Oh, well, so let's step back for a second. So I have a dividend portfolio, right?
Sure.
Its only job is to generate dividends, right? So I have multiple closed-end funds and ETFs that pay monthly dividends. I'm all about the monthly dividend. I actually hate it when I only get a dividend every 3 months. I love the monthly. Paycheck comes in, you can hear the register. Ching, ching. I check it. I keep a spreadsheet, and I'm tracking my dividend income. What I do, I have traded covered calls and selling puts for years. Well, and I mentioned to you this. I like to collect dividend paying stocks almost like people collect sports cards. We talked about this.
Yep.
People collect sports cards. I collect dividend paying stocks. Now, I look at that as my dividend tree. You buy a dividend paying stock, it pays the dividends. We can take that monthly income and do multiple things. We can drip invest it, right, where it buys equivalent shares, or we could take that dividend and buy other dividend paying stocks. It's a dividend tree, and we bear the fruit to build, to have more dividend trees. So right now, I have a garden of dividend trees, which about 9 trees, right? So what we do is we write covered calls, sell cash secure puts, take the premiums. We buy the monthly dividend paying stocks, right? So for me, that's my strategy. I buy stocks, write covered calls, take the premiums and profit, dump them into dividend paying stocks, and then we repeat every single trade as much as we can. Sure. I don't always do all of my money that I make. Like I'm going to take a trade off the board, yen. I was supposed to make $2,100 on a 30-day trade. Yen has fallen. So right now there's about $1,100 in profit in that trade. I'm going to take it off the board because I have a rule. If the option falls 50% within the first 2 weeks, take it off the board because I can extend the expiration and pick up the same premium. But we pocketed $1,100, right? So trade 2 will bring the same amount as trade one. We just have to extend it 2 weeks, but we're already 2 weeks into this trade. So you see how we move it forward? Well, I'm going to take that $1,100. I think I'm going to divide it up. $600 is going to go into an ETF, a yield max ETF that pays about 50 cents a month. And I'm going to take the other $500 and I'm going to put that into a closed-end fund. That closed-end fund writes covered calls against shares to generate its monthly dividend payout, which is about 12 cents a month. So with all that said, I would say, if you want to ballpark, my monthly dividend income is about $10,000 a month.
Wow. Wow. And see, the beauty here, at least that I found from stumbling upon your channel and watching your videos, is this idea or notion of what I happen to fall in love with, which is doubling your dividends. And that's what it's all about at the end of the day. And I love the aspect there that you have of growing these trees. Okay, so let's just start here. Someone is out there right now watching this interview, a Masters of the Market. They say, John's got a hell of a strategy. Where do they start?
Okay, I get this question all the time because if you go to my channel and you watch a lot of my videos, I show you my trade. We talk about them. Well, that's kind of advanced, right? I could be talking about deltas and leaps and all these things, right? So it's kind of hard to pick through my my videos and find that one beginner's video. I think I told you, I've been asked so many times to do a beginner series, and I actually start that beginner series, and then I get I get bored, man. I get bored. I'm sorry, but I'm here, right, with this.
Sure.
Whether I'm good, bad, or indifferent, I'm here, right? And that's where my mind's at. So I love just telling my story, and maybe somebody like an Ari out there catches it and runs with it, right? Because for the most part, I don't look back. The video I did yesterday, I'm looking to the next video because it's my next trade, right? So where does somebody start? I'm going to tell you now, and I email a lot of people that ask me, go to YouTube, type in covered call basics. It's just that simple. Try to find a video that is short, because if you're not up here yet, you don't have the mindset yet, you're going to get lost, fall asleep, move on. Find a nice and tight video on the basics of covered call writing. You're going to get excited. You'll know if that's you. You'll know if that's you, because what's going to happen is you're going to be excited. You're like, I can buy a stock, write a covered call, make 3%, and then we wait for the 30 days and whatever happens, and then do it again. You'll find out if that's you. If you're bored, man, and you just don't want to hear it, yeah, move on. You go ahead and do your buy and hold stocks, you buy your dividend. That's fine too. Just be in the market. See, that's what I tell people. You have to be in the market. I've actually talked to somebody that said they have their cash literally sitting in a bank and underneath their mattress. What did I tell you at the beginning of this video, Ari? I said the only place for small ball players like us to generate real wealth is in the stock market. Yeah. Now, hey, look, you could sit there and say, oh, well, I create a business. Not apples to apples. Oh, I could do real estate. No, you're not. No, you're not. If you're going to buy any substantial real estate today, you got to have a heck of a bankroll. And even then, at the end of the day, you've got a lot of overhead and you're not making that much. With the stock market, you can buy a stock, right? All you need is 100 shares. Buy a stock, then you write a covered call against that stock. If it's an optionable stock, there's 8,000 of them. Think of it as 8,000 properties. Pick the good ones, because in the real estate game, it's location, location, location. Well, in the stock market, it's the same thing. Buy your Microsofts or buy your Apples or your big companies like Merck, write a covered call. Let them take your shares away from you, a couple bucks higher. They're going to pay you a couple bucks in premium for that right. You get paid twice. Then you do it again. That's like rental property income. That's how I do it. I actually have a video on my channel. It's called The Poor Man's Real Estate Covered Call Writing, where I compare and contrast real estate investors with me, covered call writing. And I'll be real brief. I'll never forget. I was at a mixer and I was there. I had my drink just like everybody else, right? I'm talking to them and everything. And they're not really talking to me. I'm sitting there, I'm listening to them. And they start talking about rental property income. They all owned houses. And this guy has this many houses. This guy's going to look to buy that house, this, that, and the other. They turn to me. They say, hey, John, what do you do? And I told him, I said, hey, I write covered calls and things like that, sell premium. He looked at me. This one guy looked right at me. I'll never forget. He said, you play the stock market? Felt that small. Felt that small. From that moment on, it was game on. And I'll tell you right now, Ari, last month, I took a big hit on UPS, but cash on the absolute table, $34,000 last month. Last year, minus my square trade, I'm going to take the hit. I know all the people that are watching the video say, when are you going to take the hit, John? $171,000 selling premium. My biggest month was $28,000, pretty much average $15,000 a month. And you say, hey, John, are you spending 1.5 million, 2 million? No. A normal size IRA is what I'm spending. Anywhere between 225 and 450. Now I use a little bit more on the higher side because I did retire and I gained access to my IRA. And that's what I do. But what I'll tell you is this. For at least 5 years, I used $225,000. And I had 2 years for which I made $110,000 and $105,000 a year. So that guy that plays the stock market, I blow away real estate investors hand over fist. I don't even get engaged in those conversations anymore because it bores me now.
Let's get back. You've had quite an extensive amount of time now, experienced in the market, trials and errors, picking up the ball, running, experiencing the stock market, the ups, the downs, the ebbs, the flows. Over all of this time, decades here, what would be one or two pieces of advice that you could depart with us here and share, again, young investors who are out there, maybe middle-aged investors who are out there, perhaps some of which, because I've gotten this too on the channel, I'm almost nearing retirement and I haven't invested yet. What would be two pieces of wisdom that you can part with us here?
Well, to be honest with you, at the end of the day, there's really only one. There's only one. I mean, we can talk about many. One. Once you have success, it breeds more success. Once you have a thread of success, you'll want more of it. That is the competitive nature that everybody has, or at least they love the idea of winning. So you ask, what is that little piece of advice? I'll tell you this. You get your knowledge. You watch your YouTube videos. Maybe you read a book. Maybe you paper trade. Then you get your experience, because when you have that bit of success, one crumb turns into two, and it turns into three. And now we're talking real success, because the mindset's changed. Mindset. Because see, if I'm winning, I want to keep winning. So what do I tell the young bucks out there? What you need to do is stop, refocus on where you're at with everything we talked about today. What's your risk tolerance? What's your bankroll? Do I understand the basics for much of this? Technical trading, reading some charts. Do I know the stock I'm getting involved in? That's number one. Then we build from that. Then we put ourselves in more favorable positions, right? By buying the better stocks, trends going higher, this, that, or the other. Then we have success. The moment you have success, Ari, it's going to change everything, because now you know you can be successful. Now you believe in yourself, Ari. See, where before you didn't. See, you didn't have a mentor or a cheerleader or anybody lifting you up. You found success, and now you're wanting more of it. Look, it doesn't have to be a competitive environment for you. You had somebody on the deal the other day where they're talking about how they felt when they received that first dividend, right? They didn't do anything. They just bought a stock, and a couple days later, the dividend dropped, and they're just like, "Ooh, I love that feeling." So guess what? Now they went out and bought more stocks and more dividends. And now they have bigger goals. See, their goals were this big. Now their goals are this big. Achieving success will breed more success. But what I want to tell you is this. If you do crash and burn, what I'm going to tell you is this. Don't get down. Because, again, if you step back and you haven't destroyed your bankroll, if you haven't laid waste to your bankroll, there's always another opportunity to have success. And that's what I tell everybody on my YouTube videos. It's all about success. We have one bit of success, we're going to have the next bit of success. It's a mindset. What I'll tell you is this. I'm going to leave you on this, Art. You hear people on YouTube. They like to criticize the mindset person, right? They'll say, oh, if you're listening to a guy and he's saying mindset, buy my course, mindset, right? And he discourages you from having a mindset. He considers them fake gurus. What I'm going to tell you is you're listening to somebody that's not a real trader. See, Ari, if you don't have the mindset of success right here, you're never going to make it. You might as well just take all your money, drop it in, let somebody else deal with it. You have to have a positive mindset, almost like a cornerback in the NFL. You watch football, Ari?
I do.
There's a cornerback in the NFL that's going to get burnt by a wide receiver in the Super Bowl. And after that play's over, you know what he does, Art? He gets up. He says, damn, that sucks. He lines up again, and he makes his next great trade.
I love that.
See where I'm going with that? Every single trade is an opportunity for success. Put yourself in favorable positions so your next trade can be a success. That's my story, Art.
Success. I love that. I got one more question for you, John. This is going to be an interesting one with you, just given your strategy, but you could play this one any which way you want. Everybody who comes on to Masters of the Market, the final question is, what would they do with $10,000 if they had to make an investment on one single stock? Just pick one stock. Now, I know you're a covered call guy, so I'm just going to go ahead and throw that $10,000 at you and see what you would do with that $10,000. How would you play it?
All right. So again, remember we talked about your trading strategy, right? Some people say, well, I buy Microsoft growth, this AI, all this, that, and the other. I take that $10,000 and I probably buy as many shares as I can of TNA. TNA is the 3X leveraged ETF to the small cap Russell 2000. And then I write a 30-day covered call. Probably an at the money strike, 30 days, probably get $2.50 for it. Let's just say, hypothetically, it's trading at 35. All right, let's say you gave me 300 shares worth. I know 10 grand probably won't cover that. 300 shares. $3 dropped into my account. That's almost an 8% premium trade, Ari. Right? I'm going to get three times 9, or 3 times 3. I'm going to get $900 dropped in my account, Ari, before we even start the trade. Then the trade's going to get put on, and I'm going to have my TNA shares taken. Now, once they take them, I'm going to take that money, and I'm going to buy that dividend stock, and we're going to take that same $10,000. We're going to do it again, and we're going to do it again, and we're going to do it again. Now, if the stock goes higher, then I might have to find another one because it's too pricey for the money you gave me. If it goes lower, guess what we're going to do? We're going to keep the premium. We're going to write another covered call, hopefully at our cost basis. We're going to keep doing it. We repeat and rinse. That's the mindset. That's what I would do with $10,000. And to be honest with you, if the markets play nice, we can easily make, I'm not even going to say it. We can beat the stock market, which is the S&P 500, hand over fist, selling premium. So that's exactly what I would do. I would buy that 3X leveraged ETF. I would sell premium, and we would do it time and time again. And the profits, I would then buy those dividend-paying stocks, probably the yield max versions, for which I'm in a couple right now.
A strategy I can certainly get down with. Investors, you have to go check out John's channel. It is something you do not want to miss, especially if you're really trying to double those dividends. Really, I stumbled across John's channel, got addicted myself. Now you have him here on Masters of the Market. And John, I hope you have you back on. I want to thank you for joining me on this Masters of the Market. And investors who are out there, until the next time, see you all there.